surely 2018 can't replicate 2017.
Well, as I said earlier in the year, when we first met in 2017, was that scepticism is still, is still very fresh in people's mind, and doubt. And it's the most unloved bull market that I've ever been in my professional history. And if you look at all the estimates for 2018, such as our strategist who's just put that up, who you referred to, he's concerned about rising inflation, possibly higher interest rates. But he says, obviously, they're not evident yet. They're not in place. So while he obviously gives that caveat, he does still say, like myself, that there is room for further upside in equities.
Is it going to be a year of two halves, to use football parlance? Possibly.
Yes. Well, I think the key to all of this is the earnings and the synchronized global growth and lack of inflation, because there's no wage growth, and that's the biggest proponent of inflation is wage growth. So you've got the ingredients for another good market, I'm afraid. I know one of these days I'm going to topple off my perch, but no, you've certainly got the ingredients. Low inflation, you've got good earnings, and interest rates that will rise, but not to historical harmful levels.
And on interest rates, the Fed, of course, will know tomorrow, Andrew. And Patrick, excuse me. It's all done and dusted, isn't it? Tomorrow's. Next year, though, I mean, the Fed says 3 according to the dots. The dots might change. The market is barely pricing in 2. Where do you stand, and what impact does that have?
Yes, well, the yield curve, as you alluded to just earlier, is flat. So I think that's telling us that there isn't a huge amount of inflation. The Fed is very data-driven, and I think they'll be cautious in terms of raising rates. But I looked on futures when I came this morning. I think there's a 70% chance of one in March, but then only a 40% in June, and then in September only 15%. So the futures are saying exactly as the yield curve. So I suspect, yes, maybe they'll go in hard and then review the data, as I say, very data dependent. But that shouldn't stop, I think, certainly the continuation of this wonderful bull market, which in 9 months' time will be the longest and the oldest